What's going on, everybody? Welcome back to my channel. For those who don't know me, my name is Will. I'm a real estate agent out here in Los Angeles, California, and on this channel, I help real estate agents on their journey in the real estate industry. So if you aren't already, please make sure to subscribe to my channel. So today, we are going to go over the July 2022 California real estate market update. I have the article pulled up right in front of me from the California Association of Realtors. So we're going to go over everything together. I'm going to give you my reactions along the way. So 521 closed sales per day, 330 pending sales per day, and 268 new listings per day. 54.2% of realtors closed a sale, 43.8% entered escrow, and 47.5% listed a property. What realtors think will happen? 24% think that sales will be up, and only 10% think that prices will be up. So we still have a very little amount of realtors who do think prices are going to be up in the future. And then 81.6% think that listings will be up. So a lot of agents still do think that the inventory is going to get better. I'm one of those agents. I do think the inventory is going to get better. So there is a lot that we are going to cover throughout all of the main points from the California Association of Realtors. So let's go ahead and get through everything. So inventory now exceeds pre-pandemic levels. Love that so much. So after more than 2 years of consistent year-over-year declines in the number of active listings available for sale, the inventory shortage has shown consistent signs of improving in recent weeks. Last week, there were more active listings on the market than at any time in the past 2 years. Nearly 48,000 were on the market last week, which edges out the week of May 23rd, 2020 as the highest level of active listings since we began reporting weekly MLS statistics at the beginning of 2020. It is important to note that listings still remain depressed by historical standards, but it is encouraging to see them trend upward on a more consistent basis this year. We're extremely happy to see that the inventory is starting to go back up, because as we see the interest rate rising, we need something to work for buyers, right? I mean, home prices are up, the interest rate is up, like everything is going crazy, but we are seeing inventory start to look a little bit more healthy. It's not crazy and insane, but it is looking a lot better, which is an awesome sign. Of course, earlier on in the video, I showed you guys that many agents, what was it, like a little over 80% of agents think that the inventory will be up. So we're really hoping that it can go in this direction to make it much easier for home buyers. So let's go ahead and continue on with the article. Rising inventory helping home buyers. As the number of homes to choose from rises, home buyers are finding the market less frenzied than at any point since the pandemic began. Last week, the percentage of homes that sold over list price dipped to 46% of closings. That is only the second week since September 2020 where fewer than half of homes sold above list price. In addition, more sellers are willing to reduce their price, with 37% of active listings down from original list price last week. Also a 2+ year high. Taken together with a recent reduction in rates, buyers currently in the market should be encouraged by rising prospects of finding a home and having their offer accepted. I really want to talk about something that's so important in this. I've been noticing many real estate agents have kind of just been putting information out there that, you know, prices aren't going to drop. And now I do agree to some extent that prices are still going to be somewhat high, but definitely not what we've seen before. When we're looking at the statistics show that prices are going to be going down. Like, that's just what it is. Nobody's saying that an insane market crash is going to happen like, oh wait, not saying that's going to happen. But I am saying that the data, the statistics, the overall market, when you take everything into consideration, it is pointing towards the fact that prices will continue to go down a little bit. We're seeing less competitiveness, more inventory, rising rates, less buyer affordability. So all of this indicates and points to prices going down. Let's go ahead and move on with the article. Mortgage rates begin to rise again. After 2 consecutive declines in the weekly rate posted by Freddie Mac, the average 30-year fixed mortgage rate rose last week at 5.51%. Rates are still lower than they were last month, but that represents a 20 basis point increase increase from the week prior. Given the expectation of a rate increase in the 75 to 100 basis point range at the upcoming Federal Reserve meeting, it is likely that mortgage rates will continue their upward trend as inflationary pressures remain and demand for short-term bonds wane. Now, this is another thing that really needs to be talked about, because about a week or two ago, rates, once again, they went down only for them to go back up again. And a lot of agents were posting about the rates going down to like 5.25. I mean, I even posted about it because it was something that was great. You know, it dropped by 0.5%. But the thing is they just did this like a month or two ago where they dropped the rate by a lot and then it continues to go up again. We're going to be seeing this a lot. So if you do see the rate dropping, yes, it may be a good sign, but for the very short term, because it does not look like the Fed is going to leave it that way. They want to continue rising this interest rate to battle inflation. So it's going to continue going up. Yes, we're at 5.5% now. We were at like 5.7 last month, 5.8. So it is still a bit down right now, but we should definitely expect it to go back up. Let's go ahead and continue on. Declining mortgage applications accelerate. The number of prospective home buyers applying for residential purchase loans dropped 18% last week compared to the same week 1 year earlier. This marks the 60th consecutive week of year-to-year declines in mortgage applications that began after the peak of home buying season last summer. Through the first 2 weeks of July, mortgage applications are at their lowest level of any July going back to 2014. This suggests that recent readings on pending sales in California, which suggested further moderation in home sales in July and August, should be given credence. Now, of course, we are going to continue seeing mortgage applications going down. I've spoken to many of my lenders, and of course, this is what's going on right now because of the rising interest rate and just everything that's going on in the market. So everyone's kind of holding their horses right now. It does make a lot of sense, and of course, this does point to a market that is going to be less competitive, which is going to have sellers reduce their prices on their properties. Let's go ahead and continue on with the article. Home sales dipped to 12-year low. Existing single-family detached home sales in California was down 8.4% on a monthly basis from 376,560 in May and down 20.9% from a year ago, when 436,020 homes were sold on an annualized basis. Outside of the initial lockdown in the spring of 2020, this is the lowest level of home sales since 2008. California's median home price declined 4% in June to $863,790 from the revised record high of $900,170 recorded in May. The June price was 5.4% higher than the $819,630 recorded last June. The moderation in the median home price was due partly to a change in the mix of sales in June as the high-end market started pulling back. Let's go ahead and continue on with the article with the last paragraph. Rising prices begin to weigh consumers down. The latest reading on inflation showed the issue getting worse rather than coming in for a soft landing. The Consumer Price Index, CPI, rose 9.1% on a year-over-year basis in June, which was another 40-year high, and suggests that recent hopes that the Fed may ease off their aggressive schedule of rate hikes may be misplaced. Outside of motivating the Fed, rising prices are also expected to begin eating into overall economic growth, as despite a nominal increase in retail sales, real spending has declined in 3 of the last 4 months. This last paragraph is so extremely important. Everything is getting so expensive right now that it is weighing in on everybody. Everybody's just having a really difficult time right now. You know, I mentioned this in the last market update video that I had. You can't even go to the grocery store anymore and get a few things without spending like $100, $200. You know what I mean? Like you're just getting the bare minimum now for so much money. Things are getting so crazy. And what we see in this last paragraph is these problems will start to trickle into the real estate market. We're already seeing it. Inflation is only getting worse month by month, and we're seeing it affect the real estate market. It's something that really sucks. There's really not much I can say about it other than we have to wait and see what is going to happen. Let me know what you think is going to happen, guys. There's so much that we covered in today's video. Leave your predictions down in the comment section below. If you enjoyed this video, make sure to subscribe to my channel and leave a like on the video. Make sure to follow me on all of my social medias. Those will all be down in the description box below. But other than that, I hope you all have an amazing day, and I will see you all on the next one.